Good evening, good evening, good evening. My name is Sean Dexter. I'm back to you today with another Bitcoin USD analysis video. Bitcoin doing Bitcoin things, giving up that critical area at around 11,500 that we've been talking about for the past couple of days. Now the question is that going to be a death sentence? Are we going to be seeing new lows? We'll be talking about that in today's video. We'll also be talking about this tweet by our beloved Donald J. Trump, which will be a follow-up on what we speculated a couple of weeks ago, where we discussed how there may be a possible currency war upcoming and how that could be very bullish for Bitcoin in the long term. So if you're interested in that, stay tuned towards the end of this video, because hey, this is getting really interesting. With that being said, let's get on over here to our Bitcoin action. Bitcoin, hey, 4-hour chart here, and we did this last night right before the daily close, and I would call this a bear attack or a bull trap, depending on how you want to look at it. Now the thing is, were there signs? We powered through this major area that we talked about, 11,500. That was a critical area across multiple indicators, right? What did we do right after? We came and retested that area, which was actually a good buy opportunity, right? Don't look at what happened after, okay? Because when that showed up, you don't know if we are going to pump after that or we're going to dump after that. But there were indications telling you that, hey, we may be going down because there seems to be sell power or rejection around this area. Because after the test of the 11,500, we went on to get rejected from making a higher high, right? What we wanted to see was to at least break 11,968, or let's say 12,000, to round that off. And I was expecting that to happen. But we did not. And that's what trading is sometimes, guys. It will go the other way. And what do you know? We made a lower high instead and got sold into right after breaking this support that was initially resistance right before the daily close, which matched up with the 12-hour and the 4-hour. This was like around 30 or 20 minutes before that, and that was very telling to me that hey, we are not ready to be making an upwards move just yet. Now the question is, does that mean that we're going to be going straight down? I would say no. Here's the thing, guys. I know a lot of you guys are getting caught up in the lower time frames, and I don't blame you, right? There's a lot of action being done on the lower time frames, and if you don't look at the lower time frames, you may miss certain entries. But let's go ahead and look at some of the higher time frames. I'm not even looking at the daily just yet. Let's start with something like the 12-hour and see what's going on. So on the 12-hour, you can see that the picture doesn't look so bad, does it? While the low time frames may look a little dire, the 12-hour tells a different story. It tells you that when on our first drive down, we were picked up pretty aggressively, by the way, on the green 55, okay, broke the 21 on the first drive up, okay, retested it, bounced, and now we've come to retest it again, and we closed above this morning, guys. We closed above the green, the yellow 21 EMA, which was very telling. We got sold into a little bit, but then again on the next 12-hour candle, buyers stepped in and pushed it above the 21 EMA. And where did we get sold into, by the way? What was this level over here? Let's go on over to the daily 1 time frame up, right? What do you see? You see the daily 21 EMA coming up right over there. In fact, this could be considered, and I will consider this, a front run of the daily 21. Look at this, guys. On a longer term perspective, okay, when you're taking your trend trade for the big wins, you will see that every buy around the daily 21 EMA has been a great opportunity, okay, all the way from 3k, buy over here, big trend trade. You buy over here, big trend trade. You buy around here, big trend trade. Okay, now you can get a little bit more precise with how you enter, and we talked about that in our previous videos. But look at that, we're still around this area. Things aren't dire yet. We are not there yet, okay? And you stay bullish as long as the bigger picture is telling you to remain bullish. And look at that, guys. We're still around this area. We got front run. The 12-hour 21 EMA got sold into. Okay, we got near the daily 21 EMA level, which was around here, and then the 12-hour got defended just before the candle closed and closed above, which is very, very telling. Let's go ahead and look at the 12-hour again, right over here, right? The 21 EMA got defended, and now I actually want to draw your attention to something very, very interesting that I've been following and noticing, and now with confirmation that I have in front of me, I'm going to follow this a lot more closely. We're going to pull up the CME charts. Where I have it up here somewhere. There, CMEs. Okay, we're gonna keep on. This is wrong. Okay, there it is. Okay, so here we have monitoring. There we have CMEs on the 12-hour, and let's turn off all our lines over here. And you can see that the 12-hour 21 EMA and the CMEs were defended a lot more aggressively. As soon as we came down over there, we were bought back and we closed above the 10 SMA, and now it looks like we are resting right above that level, right? This to me is extremely bullish. You turn on my drawing tools over here, you can see a perfectly drawn bull flag. Okay, bull flag that doesn't look so good on the spot charts, but CMEs are getting this bull flag very, very well. And guys, I'm not sure if you guys remember, but go back and look at my previous videos. If you guys remember how I was talking about the previous run, the breakout of a symmetrical triangle that everybody was calling a ascending triangle, do you guys remember that? It was this zone over here. Even though I had initially called it a possible ascending triangle in this zone over here around 9,000 region, I had switched to a symmetrical triangle. My bias switched to a symmetrical triangle because there were certain signs on the spot charts telling you that was a possible symmetrical triangle. In fact, the CMEs had actually got it down perfectly as a symmetrical triangle, and you had got a way better entry right over here, right? You got the break, you got the retest over here, and then just onward and upward. And now is this forming a bull flag? It'll be interesting to keep an eye on this to see if the CMEs are actually getting the price action a lot better. If you go ahead and turn on your daily, you're going to see something even more interesting that's making me more and more convinced. While the spot charts are not telling the right picture, or not telling a clear picture of how strong the daily 21 EMA has been on this entire run up, you'll see that every touch of the daily 21 EMA on the CME charts have been getting bought up. Touch here, bought up. Remember, on the daily, on the spot charts, this was all the way down, all the way past the daily 21 and came down to the key zone, right? We did not get anywhere near the key zone on spot. We got picked up on the daily 21 and got bought back up. Got picked up over here, got bought back up. Got picked up over here, got bought back up. Same story over here. So CMEs are getting the price action a lot better, and CMEs are looking very, very constructive. Now, what's left to see is how this unfolds in the days to come. Okay, yes, guys, it's a trend trade. You gotta allow for the price to sometimes move against you. We're gonna go back to our spot chart now, and I want to draw your attention to this area over here, right, where logging on. Okay, so we're going to go back to our spot charts here. We have our spot charts right here, and I want to draw your attention to this area over here, guys, where I had picked up and where I had added to my long very aggressively after so I added over here. We got this huge run up, added my long over here, right? Now the thing is, this area was very, very shaky as well. Price action did not look very, very convincing at all. Okay, we had the huge Bitfinex FUD. We were in a huge indecision phase, and everybody was like, charts look like shit, charts look like shit, and forgive my French, by the way, and I agree, right? It wasn't the most convincing times, but that's when you need to have the sack and sometimes step in when all your technical indicators are giving you that edge, right? I added over here very, very strongly, and look at how it paid off. And you didn't even need to add too strongly, right? If you took a small margin trade of around 2 Bitcoin, right, didn't have to leverage too much at all, and you'd be sitting all the way up here now at a 2 Bitcoin profit. That's a $20,000 win, guys. That's significant. That's significant without taking on too much risk either. That adds up. Even over here, like, what I'm trying to say is, and I kind of went off on a tangent, is that if you got shook out on your position over here just because price was moving against you each time, and you lost sight of the big picture because you're focused on the lower time frames, you will not get those big wins. You will only get the small wins and get shook out of the big wins. And over here at Mango, we are going to be focused on the big wins. Remember the mistake I made over here? Let's go back onto our beloved Ichimoku chart. Remember the mistake I did over here? It was because I had one, let the lower time frames affect me in getting those nice range trades and be happy with them, and two, I was a bit too tired from I just allowed the load. In fact, you know what, if I didn't mess around with the low time frames, maybe I would have been in a better state of mind to catch this and to look at the bigger picture, right? Again, but I rectified my mistake by getting in over here near the daily 21 again. And now, even though we have this pullback, I'm sitting fine in the green, right? I'm gonna allow myself to give back profits in an effort to catch the bigger trend move. And that's what it depends on your trading style, right? It depends on your trading style. If you're more akin to catching those small range trades and accumulating throughout the trend, hey, that's your trading style. But you got to stick with that. But you got to ask yourself, what kind of trader you want to be. Want to get in and out of position throughout this entire Bitcoin rally? If so, so be it, but stick with it, because if you don't, you will lose your edge. Similar with trend trading, stick with it or you will lose your edge. And now my edge is trend trading. Remember what the Mango indicator said a couple of days ago too. We got the chance to accumulate, we missed it, but it is now in the zone where, hey, we may be starting a brand new trend. Until proven otherwise, okay, until the higher time frames tell me that the trend is waning off, I'm going to stick with it. And I want you guys to do something, okay? I know this may not be the most technical way to look at things, but it is one of the simpler ways to look at whether you should be going for your bull trades or your bear trades, whether you should be shorting or whether you should be longing. Look at this market, just step back and look at this entire run. What do you see more? Which color do you see more? Green or red? Green or red? Remember, at Mango, all we play is the probability over here, okay? That way, in the long run, we will win out. We don't care about winning each single trade, okay? We will lose one trade, we will lose two trades, we will lose three trades. It's not been happening recently because the market has been in our favor, but I'm fully expecting it to happen someday. It may not happen, but I'm mentally always prepared for that. Why? Because we play the probability, right? And what is the probability saying right now over here? What is it saying? We are seeing way more green than red. It's telling you that if you keep taking trades in favor of the bull side, you are more likely to get more wins. Yeah, you may catch one of these red wins every now and then, but you want to keep the probability on your side. And the best way to do that is to pick the color that is showing up more often. And right now, and that's the beauty about Bitcoin, guys. Even in the bear market, right, the green show up a little bit more than, well, not more than the red, but it shows up more than the red would show up in a bull market. Like if you go ahead, okay, so another way to identify a bear market is to look for when the red starts showing up more aggressively. This is a very amateur way of doing it, by the way, but look at the bull markets in Bitcoin. It's so green. It's so freaking green. Do you think the short side is in your favor? Look at the moves you're getting on the short side. 23%, okay, over here 8%. Look at the move that we caught, guys. Even if we ignore our entry at 3K, right? Look at the move that we caught. 200%, okay, and we may keep going. Do you want to miss a move like this? Because we are looking at, don't let a small 8% move shake you out of a mega trend, okay? Remember, we are talking big numbers here at Mango. When we started our videos, okay, at 3K, 3.6K, 3.8K, we were talking about 13K and people were laughing, and now 13K became a reality. How do you think that position is doing for me? Okay, similarly with 5K, 2x only from 5K, guys. Now 8K, once we reach 16K, that position is going to be 2xing. If you let a 10% move affect you, you are going to miss out on the 100% move. That's the point I'm trying to make. And you need to be willing to take the 10% hit, maybe even take a 15% hit, and position yourself accordingly. Now, you don't have to. If you're smart about it, you don't have to. Think about it. The closer you buy to if you follow your edge, you can keep yourself safe. Risk manage always first, right? Risk manage always first. And we're going to be talking about how we can risk manage as well as catch the big trend trades over at Mango. But I don't want you to lose sight of the big picture. Now let's go ahead and look at the 2-day. Look at how the 2-day looks. What does this look like to you? We actually have freaking rising rising candles over here. Each candle is actually closing and opening higher and higher. Right now, let's go ahead and look at how CMEs look. Actually, I didn't look at that. Oh, wrong chart again. That's Bitcoin dominance, and that's that over there. CME is again not looking too bad at all, right? Yeah, it's not the prettiest chart, but it is kind of flagging out in this region. Going back to our spot charts and looking at our momentum oscillators, let's see what's going on. Again, oscillators are going down, right? And what are we seeing price action doing? Price action actually going up and sideways. So this is just giving the oscillator a chance to get down onto the neutral zone around at 50-ish, right? Or you can say the bottom of the bullish zone, and then cross up again and start another run. We talked about this yesterday. I know I'm going off on a slight of a tangent, but this video is going to be about focusing on the big picture, guys. Focus on the big picture. Let's go ahead and look at our 4-day, actually, because we don't look at the 4-day enough, and I want to point something out to you guys. We turn on our Ichimoku. You know how we here at Mango played the daily edge-to-edge trade, got that huge win. The 2-day edge-to-edge trade, got that huge win. The 3-day edge-to-edge win. What do you know? 4-day edge-to-edge trade actually played out too. And look at this now. For the past the past 3 4-day candles, we've been living above the top of the cloud, and the top of the cloud has been holding price above it. Okay, it's been playing as support. Now this new 4-day candle just started. We have up until it's 3 more days until this 4-day candle closes. If we close above the cloud again, that's going to be very, very telling. It's telling us that the top of the cloud here is being respected, and we are likely going to see price action move high. Look at this, guys. It's a freaking bullwick. Okay, this indecision candle and follow with a bullwick, that's bullish. It's telling you the story that while sellers stepped in, okay, the buyers stepped in as well with equal force. You guys remember this over here, this 4-day wick? We talked about it in a video back then, and look at how price moved right after. Yeah, we had our drawdowns, but big picture, guys, big picture. Let's look at the weekly, and it's telling a story as well. Now, the weekly has reached a scenario where as long as we close anywhere above 10,827, in my opinion, this is going to be fine. Again, we're respecting the top of the cloud, right? And if I see an indecision sell candle followed by an indecision buy candle in a bull trend, to me that is bullish. Now I know a lot of people are going to look at 2 indecision candles as a bearish formation, and we're likely going to have a sell-off, but to me, indecision and indecision in a bull trend is a bullish sign, and an indecision and indecision in a bear trend is a bearish sign. And you got to play the bull market while you're in the bull market, play the bear market while you're in the bear market. Make things easier for you guys. Just make it easier, man. Now let's go on over to a 4-hour and see how things may pan out on the lower time frame. As you can see, we had an edge-to-edge trade right here, getting picked up on the Tenkin, right? May pop all the way back over the cloud. What I'm going to be waiting for now is this cloud to turn red. It is twisting red now, and then us have a bullish TK cross. Pop over the cloud, price to pop over cloud, and then we're going to see the upward momentum. If you did not get into a position over here, that's what you're waiting for to keep yourself safe and get a nice trend rate moving towards the upside. But for now, this is a no trade zone if you're looking at the lower time frames. You don't want to be buying in here because it's bit unsafe, right? So the time to have been buying was when you got the daily close over the 21 after that bullwick, after you see price action, right? Let's go ahead and look at that again. We'll cover that for you guys right here. After you saw this move right here by the bulls, this was the time to be getting in your big positions, because we were likely to see follow through, and we saw the follow through right after. It was a good day, but then the bear stepped in, right? We are likely not ready to go up, similar to what happened in the 8K region as well as the 7K this region over here, right? Even though we had our first drive up, sometimes you just need that consolidation, right? Get everything in equilibrium, and then have your drive up. So that's how things are going to unfold. For all we know, what am I looking for the downside? I don't want to sound like a perma bull here, right? You got to be careful. Let's go back on to our Ichimoku on the 4-hour. 1, if we break the cloud and the tanking towards the downside, I'm looking for the test of the 200 MA, and this is where I had got greedy last time, guys. I was looking at this area here too. I was looking to be a buyer here. It never got down there, and what did I gave for 2.83%. This is where my greed stepped in. For 2.83%, I gave up a move to I gave up an 11% move or something like that. Yeah, I gave up a 10% move. And this was screaming in my face. If you just go, this is the red line, by the way, guys, is the red 200 MA. If you turn on your purple 200 EMA, you can see that we were supported along that line. Now, if we break the Tenkin, and the cloud towards the downside, I'm expecting price to come all the way down here, which in my opinion would be another accumulation zone. Remember what we were talking about with the mango indicator, those accumulation zones. Well, this was your accumulation zone. I'm not entirely sure if we will get another one flashing on the mango indicator, but I'll pop it out, pop it open in a bit, and also pop it open every time it does show up. But I don't want to confuse you guys too much, so let's go ahead and look at this area over here. You guys see the red 200 MA pop over the purple 200 EMA, us get all these tests over here. Even though it looked bullish, right, we pop back down, accumulated some more, and then we had a huge run. We could very well do something over here. Okay, what I'll be waiting for is similar setup like over here. We got the TK cross, popped up over the cloud, and then had the run again. Okay, accumulate a little bit more, get the TK cross, pop up over the cloud, and get a run. But these are the lower time frames. You don't even need to worry about that. Let's go back on over to a 2-day, turn on our EMAs, and see what's going on. The 10 SMA getting defended perfectly on the 2-day. The 21 EMA getting defended. Look at what happened here, guys. You got a 10 SMA, okay, a test. Got a 21. It's so in structure. It's right, almost methodical, right? It is what you would expect to see after having a huge rally. You want to see the 10 SMA get tested. Okay, that was defended. Then you want to see the 21 EMA get tested if you don't have positions in yet. Yeah, we got that as well. Got defended, closed above both, and then a retest of the 10 SMA. Like, this is what a buyer would want to see, a bull would want to see, and as long as he's defending that, it is fine. Again, let's go back onto a daily now to see what you would be looking at for as a bull for constructive price action. One, what do we have? We made a high, right? We made a low, we made a lower low. Okay, we made a lower low, then we made a lower high. Okay, let's go over that again. Made a low, a lower low, and then a lower high. What do you want to see now as a buyer to maintain this trend? You want to see one, a higher low. Okay, so one, we made the lower low. Now you want to see a higher low. Could this be it? Could this be it? It's yet to be seen, right? If we pop back over here, we can confirm this as a higher low, and then maybe another lower high, and then a higher high, beating this guy over here. So what? Yeah, well, we have a low, lower high, higher low. Okay, now perhaps we see another lower high, or we see a higher high, basically creating a squeeze structure over here, which would match some sort of flag formation where we're going from the 12-hour consolidation into a daily consolidation, and from a 4-hour flag in you guys get the picture, right? You can kind of see the flag formation right over here. In fact, I may have there you go. Okay, this flag, what is this line doing over here? What the hell is that? Okay, this flag formation over here, by the way, guys, some people are saying this is too big of a bull flag. This is too big of a bull flag. Okay, so now here we have the weekly, and I want to talk about some larger targets for the longer time frame, right? And by longer time frame, this could be years from now, it could be 5 years from now. I don't know. I don't try to time anything, but I do try and speculate based on combination of price action and fundamental. Especially when I'm talking about long term, we can look at fundamentals. The Bitcoin fundamentals, blockchain fundamentals, and also what's going on with the economy. And over here at Mango, right, we aren't looking at just simply 20,000 or 30,000 like some people. We are going to be targeting much larger numbers. I'm talking about perhaps 250,000, 280,000, anywhere around this range. This is a strong possibility, and perhaps even higher, perhaps even higher, even though a lot of people could be laughing at these numbers. Now, where am I getting these? Several. But one of the things that we've already discussed here on Mango was possibility of a currency war, right? 2 weeks ago, we talked about how Donald J. Trump posted the street saying Mario Draghi just announced more stimulus could come, which immediately dropped the euro against the dollar, making it unfairly easier for them to compete against the USA. They have been getting away with this for years, along with China and others. So what Donald Trump was basically referring to was how Draghi would be using interest cuts, right? All he did was announce it. And the euro dropped against the dollar. And essentially that is really good for them, not good for the United States, of course, because what ends up happening is that they have a great advantage when negotiating the trade table with other countries, putting USA at a disadvantage. Now, apparently China, well, not apparently, we know that China has been doing this for years and years. This annoyed Trump, and Trump basically, with this tweet, to me it was like, okay, he is beginning to start laying the seeds for announcing his own interest rate cuts. By interest rate cuts, we're talking about printing more money, guys. That's essentially how it works. Print more money, release more money into the economy. This does help spur the economy, okay? It does help increase economic activity. It raises the stock market, which is why, by the way, you saw that you're seeing the SPY go up and up and up as well. It does do all of that in the short term, but in the long term, what is happening is your currency is getting debased, right? Your currency is getting debased. Now, this happened a couple of weeks ago, where we talked about, go ahead and watch that video, guys, where we talked about how Trump and all these other world leaders may be getting into, this could be the beginning of a currency war, right? And now in Trump's most recent tweet, insinuating it even more. China and Europe playing the big currency manipulation game and pumping money into their system. What we talked about, in order to compete with the USA. We should match or continue being dummies, sit back and politely watch as other countries continue to play their games as they have for many years. What does this mean? This essentially means Trump is saying that we would be dumbasses. Okay, the USA would be dumbasses to not print more money. Okay, we got to print more money or we won't be able to compete. And if all the world leaders start having this mindset and they all start printing more and more money and pushing it into the economy, your money is going to stop having the value it did a few years ago, guys. I'm not going to do an economics 101 with you guys. Just think about it. The more there is of something, the less value it has, even though you think you're gaining more of it. But scarcity is what creates a value, right? Bitcoin is going to be scarcer and scarcer every 10 minutes that passes by. As more and more wealthy people start reading these sort of tweets by world leaders, especially like world leaders like Donald Trump, they are going to be running away from fiat currencies because they are going to be losing crazy amount of wealth each time money is pumped into the freaking system. You're always seeing signs of it. You're always seeing people running away from fiat and running into safer and safer sources of wealth. We saw it with gold, right? Let's go ahead and pull up the. Okay, so here we have the gold chart, right? We talked about this before this huge breakout. Remember, on the Donald Trump tweet, the first tweet, okay, this one over here, we went on over to the gold chart, okay, and we charted this. We talked about how there's this ascending triangle that has been months and months, perhaps years in the making, and how we are likely to see a breakout soon. And the tweet lined up with that, right? We talked about how we are going to see a breakout soon because of a currency war that I was speculating on, and the very next day we saw the freaking breakout. The very next day. Coincidence? Possibly. But guys, all the signs are coming together. We're seeing gold have a major breakout. In fact, we just closed the monthly. We closed above. We're come to retest that resistance line that turned into support now. It looks like we're just going to rally off this and have a mega run. Gold having a run. Bitcoin having its parabolic move, okay? You can see institutional investors running, like, the break on gold was pretty significant, guys. Significant, right? And now you're seeing signs of institutional investors entering Bitcoin, scrambling for more Bitcoin. There's not enough. The thing is, guys, there are reports coming out saying that they don't even know about Bitcoin halving. They already think Bitcoin is so scarce, and once they find out that it's going to become even scarcer, if that's even a word, things may get very crazy. And just like how people wish they could have bought at 3,000, you may very well see them wishing that they buy at around 10,000. Don't know. Okay, Bitcoin is in such a volatile state right now where you shouldn't let the crazier numbers not be, or you shouldn't let them be an impossibility for you. You shouldn't let them be an impossibility for you. Look at all the economic conditions too in the world. I'm pretty sure you're seeing it in your countries, depending on which country you are, but you're seeing that things aren't what they used to be. They aren't what they used to be. Fiat in general is destined to failure, right? The higher probability of it failing than it not. Just because in our lifetimes we've seen it not fail doesn't mean, I mean, come on, we're seeing fiat currencies fail across the world right now, man. I'm not going to go through all of that with you now, but you guys know what I'm talking about. Alright, so, is there anything else I do want to mention? Yeah, that's pretty much it. This is another indication where Donald Trump taking another step towards a currency war. As more and more countries start flooding the economy with more printed money, more wealthier people are going to start running to safe havens like Bitcoin. And people, as soon as they figure it out, as soon as they get it, as soon as they understand it, okay, and it's not as complicated as they think it is. They sit down only for a little bit. As they sit down only for a little bit, they'll be like, oh shit, why wasn't I in on this earlier? So I'm going to leave you guys with that. I hope you guys enjoyed this video. Throw it a like, throw it a subscribe. I'll see you guys in tomorrow's video.